This is Eric Mwada with Mwada.com. It is December the 27th, 2011. Happy birthday, DJ Donna. What's up, brother? Anyway, let's take a look at what the markets are doing here this last week of December, last week of the year, on what has been a very volatile, but at the end of the day, we see the market closing very close to where it began the year, with a small percentage gains in the markets. Actually, as of right now, we are looking at a market that is has a return of about 6% on the Dow, unchanged, or about 1% down for the Nasdaq, and about 1% up for the S&P 500. So let's call it unchanged despite all the volatility in the market. In fact, one can argue that that's a bullish end of year return, because for most of the year the market seemed like it was gonna be trending much lower. If we take a look at the Dow for this final week of 2011, you see that it's now above the 12,231, which was the highest closing week going back to October. So as long as the market remains above 12,231 on the Dow, you can continue playing the long side in this market. On the other hand, you need to watch out and see how the market is going to respond. If you find yourself long when the market moves back below, if it moves back below this number here, then you'd want to go short. Now, as of right now, it's not unusual to see the market move slightly higher into the end of the year as people close their books. But I think, to me, I still think that we've seen the move for now, and the next big move in the market is down. And I base that pretty much out of the consideration of the airline index, which is to me already giving me short-term sell signal. So this is the Dow. As long as the Dow remains above 12,231, you want to stay and play the long side. Now let's take a look at the Dow Daily to see what we are looking at here. Again, the same thing. I remember this break area we've been talking about. Market broke down this trend line break. So this area here, where the market is currently trading at, that general area, is an area where you'd expect market to turn around, if it's going to turn around. On the bullish side, you see that there are some early signs of a market that wants to go higher over many months or weeks. That crossover on the 50-day and the 200-day moving average could set up for some bias to the upside. Now, if I take a look at the Dow RSI, I see that we are at this RSI level here, which is exactly where I would expect this market to find resistance. So nothing is really out of the ordinary here in what the market is doing. That's why I say, even though it's been doing well for the last couple of days, might do well into the last part of the year, the last couple of days, still I think the next big move on a day-to-day basis is going to be to the downside, and nothing wrong in setting yourself up for that kind of a scenario. Now let's take a look at Nasdaq weekly chart, which is way off its breakout level. You can see that the Dow, unlike the Nasdaq, unlike the Dow, the Nasdaq is way off its recent October highs. The October highs are right here. Nasdaq's trading here. So it needs a lot of movement for you to do what the Dow is doing or attempt to break out. But more telling you of what the market is trying to do here is on the Nasdaq RSI, the relative strength index. You see that it's back at this line resistance level here. So the Nasdaq is just right there and closed just above 50 last week. So we'll see that if it loses ground, it's gonna probably be a significant down week if it turns negative net for the week. Right now, it's back at this RSI resistance level, and so that's why I'm playing looking at this market from the point of view that we've seen short-term highs around here, or maybe might even take us into the end of the week without changing much of the way the weekly chart looks. Now, on the New York Stock Exchange weekly chart, you see that really, if we take a look at it, is if you draw a straight line here, this gray line here is where the market is trading at, right there. So an area where you'd expect natural resistance. So we have what seems like to be a wedge here. You got that line there connecting the highs, and you got another line here connecting the lows. So somewhere around here, this market is gonna move out of range, either up out of that range or break down. So might explain why the market, given the low volume, end of the year, just the market trading in a range, eventually it's going to have to decide which way it wants to go. As far as the relative strength is concerned, I think again we see, to me, evidence of resistance. That's why I'm leaning towards the next short-term big move in the market being to the downside, because if you take a look at, this is where this market has been stalling in the RSI, and we seem to be in that general area of resistance. So that's still going to be what seems like the case. Short-term resistance in the market after a decent move lately. Dow Transport, again, it's another major index that is breaking out above 5,011, somewhere around here. As long as it remains above that level, you want to play the upside. As long as it remains above 5,011.98, you want to continue playing the possibility of an uptrending market. You see the moving averages are moving higher, pointing nicely to the upside, so momentum is looking good. Also, the signs of the market could break those resistance to the upside. If you take a look at the weekly RSI for the Dow Transport, you see that it's now moving above these top lines here. So that slight breakout is just all you need for markets to continue pushing higher. So the bulls could have an argument here that the market is setting up for further movement to the upside. Now, like I said, the airline index, and let me start off with the daily here for the airline index. To me, this one is the one that's leading the market to the downside.